So let's talk about Buffett's billions. Unless you've been living under a rock or don't use the internet, you would have heard of Warren Buffett. He's one of the most respected investors of our time with a huge $100 billion net worth, and his company, Berkshire Hathaway, with another huge $325 billion stock portfolio, according to CNBC's latest report. So how did Warren accumulate such wealth? And wealth, we're going to use the definition from Rich Dad Poor Dad, which is how long can someone survive if they cut off all their income streams with their net worth. So if you had $1 million in your bank, but your outgoings were $100 million a month, you're only going to live for 10 months. So you're not really that wealthy. I think with Warren Buffett, there's $100 billion sitting in his bank account. I'm pretty sure he can live for a pretty long time if he stopped all his income streams. So it's safe to say Warren is pretty wealthy. So how did he accumulate so much wealth over his career? That's what's interested me, and that's what I'm going to take a deeper dive into right now. So I decided to just start where all good detectives start. That is, of course, the internet via Google. Once on Google, the first thing I'm going to type is Warren Buffett yearly ROI. And there's going to be so many pages that we can look at. We've got the top one here, yearly returns. The first one that stands out, lazy portfolio ETF. So what's this? Warren Buffett versus stocks portfolio comparison. This is quite interesting. The Warren Buffett portfolio obtained a 14.93% compound annual return over 10 years. Okay, we want to look for more than 10 years. So what have we got here? What information have we got? Historic returns. Warren Buffett's portfolio. Capital growth. Warren Buffett, an investment of $1,000 since January 1977, now would be worth $116,688, a total return of 11,569%, 11.24% annualized. So this is looking like this is actually his yearly ROI since 1977. However, I want to check this. So let's take a look. What have we got here? Yearly returns comparison, common historical. Okay, so we start from 1977. Perfect. I'm going to manually add all of this up, and we're going to find out exactly what his yearly ROI is on average since 1977 until 2021. We are going to look at another website as well, just to make sure that these do look around about right, because we don't want to put in the false information. But it does look there or thereabouts, doesn't it? You can see as well, even his first year, he made a loss. He made a loss here. Made a loss back in 1990. But look how many gains he's making. 3 losing years in a row. Did that stop Warren? No, it didn't. Multiple returns there. Big hit there in 2008. Market crash. 2018, a small loss there as well. But look at all the gains. Had 3 losing years in a row. Do you think he lost investments? Maybe the short-term mindsetters, but the people that have been in since 1991 certainly would not have been deterred or distraught from 3 losing years with Warren Buffett's portfolio and track record. So we have this website. We're going to keep this one up. Let's go and find another website. So let's go back to Google. Type in exactly the same search. Okay, here we go. The truth about Warren Buffett's investment track record. Berkshire shares have seen an average annual return of 20% compared to the S&P's 500. Well, we've seen difference of that already, haven't we? Guru Focus. Okay, here we go. So this is looking fairly similar to what we were just looking at. Only since 1980 though. We want something a bit more historical. We want the true reflection. 1977. So let's try something else. What is Warren Buffett's annual growth rate? 20%. Warren Buffett, CEO of Berkshire Hathaway, holds an impressive investing record. The company delivered an annual average return of 20% since 1965. Good source, according to Berkshire Hathaway's 2020 shareholder letter. So it came straight from the horse's mouth. Okay, so this is like a pretty good statement here according to Berkshire Hathaway's 2020 shareholder letter. So what I'm going to do, we're going to take this 20% a year. We're going to work out from our first comparison that we got here, and we'll find the average between the two. So say if this comes up at 16%, we got a 20%, we can say the average is roughly 18%. And that will give us a good average yearly return for Warren Buffett. So let's work that out now. First step is to add every single annual return together, even if it's negative or positive, to give me a total return over the Berkshire Hathaway's 44 years of trade history that we have here today, which gives us 550% divided by 44 years track record equals 12.5% average annual return. However, on Google, we kept seeing that 20% figure pop up for the annual return. So we're going to add 20% to 12.5 divided by 2. That will give us an approx average from the data that we have of 16.25% annual return for Berkshire Hathaway over a 44-year period. Pretty damn good. The best year was plus 34%. The worst year was negative 32%. An average ROI of 16.25%. What can we learn from Warren Buffett? Well, first of all, he's certainly no superhero. He's not making thousands of percents per year to try and get that 100 million net worth. He simply used time and consistency to his advantage. He's got that long-term mindset. He's not trying to get rich quick, which is a huge problem right now in 2021. People with talent, skill, drive, motivation are trying different investment vehicles like Forex, crypto, stocks, so on and so forth, and they're failing because of their mindset, not because of their ability, because they want to get rich quick. They would try Forex, for example, for a while. Think, I haven't really made a substantial amount of money. Okay, let's try crypto. Same thing happens. Let's try stocks. Same things happen. They're not going round in a circle. Before they know it, years have gone by. They're no better off than what they was when they started on day one. Warren doesn't have that mindset. He's stuck to one thing. He's mastered that. He's even had losing years and he's stuck with it, and he's got $325 billion under management. Absolutely crazy. This is obviously a proven system. Don't let a losing week, month, or even year put you off of your current journey. You need to stick with it, long-term mindset, and look at the bigger picture. I think we'd all rather get rich in 5, 10, 15 years than not get rich at all. When Jeff Bezos met Warren Buffett, Jeff said, "Warren, your investment strategy is so simple. Why doesn't everyone just copy you?" Warren replied, "Because nobody wants to get rich slow." That's what people don't want to do. They don't want to get rich slow. They want to get rich quick. And that's the mindset that we need to avoid. Thanks for tuning to this YouTube video. Don't forget to like and subscribe, and never ever limit your potential by trying to get rich quick. Long term and consistency is the road to true wealth.